What's going on, investors? Just here from Investments, and today is March 23rd, 2023. And today we are going to look at some crypto charts. We're going to look at some stock charts. We're going to see where we stand today. Big thing is obviously Bitcoin has been pumping the last couple days, so it's very important that we start there. And obviously it's the most fun of these charts because it's just been on a massive tear over the past couple couple of weeks. You're at 13 days of pumping and you're at about a 45% gain from the past 13 days, where you bounce off this level at 19,937, which correlates back to the 2017 high. So very important level that held, and it also correlated with the 200-day moving average. You had a significant pullback before then and just bounced right off there, and you have since then pumped to about 2879, significant level again, and this is dating back to multiple touches as support when you were pushing all-time highs, right? So you had these all-time highs of 64 and 68, and when you had pullbacks, this is the line you were touching. So very important line that we are testing right now, currently playing around that line, but have yet to really break out above that significantly, at least with a daily candle close. Oh, excuse me. Our little drawings here show there is a little bit of indecision going on, right? Are we going to pull back before heading that way, or are we going to go above that line and back test it before springing forward? Either way, I do think this pump is going to continue just because of the macro conditions. There's never been a more strong, sound case to own Bitcoin in your portfolio, realistically. With all the bank run situation, the lack of liquidity that banks have, where most of their money is tied up in bonds, and there's a situation where they are very reluctant to allow people to cash out their money. They don't want that to happen because if so, they have to cash out some of those bonds and at a loss, which is not going to be great for them. So there's a massive liquidity crisis going on in banks. So there has never been a better time to be your own bank and own something like Bitcoin, right? In fact, I've kind of been preaching that this is the whole reason that Bitcoin was invented back in the financial crisis of 2007, 2008, right? This is the reason. And it's been a while since we've needed that reason, but it's here. It's here again. And interesting to see, but I do think that macro condition is going to make this continue. But you will see some playing around. You're not going to see it just go straight up. I mean, we could have days of going straight up, but I don't think that's going to happen. You're going to have pullbacks. You're going to have pumps and pullbacks along the way. Just typical price action, right? So what we're saying is a realistic play here, one, is to pull back to about 25,000, give or take, and pump it back up, or you could break above that 2879 line and then pump on higher. Realistically, I think if we do that, your next stop probably isn't till $31,000 to $32,000. So more gain potential, and then who knows what happens after that. Like, you could continue to, I don't know, you could continue to push all-time highs to retest them. Doesn't have to be a good investment at this point. And I'll show you in a second what I think is possible to happen, and maybe it won't. But one of the things I'm noticing with this is some days when we're getting Bitcoin to kind of just level out, you're also seeing alts start to run, which is very indicative of like the 2017 time frame, where you would see Bitcoin make massive gains. Sometimes it would affect the alts negatively, And then as it tapered off, kind of leveled out for a day or two, your alts would pump up to catch up. So you'd see like the following day, alts have a really massive spike. Today is not a great example, but I saw that yesterday happening and I was like, kind of reminded me of old times. Miss those old times with the XRP days where it actually did something, where, you know, everyone was, you know, having a lot of fun back in 2016, 2017. But yeah, so I do think we are continuing onward. Nothing says that there's a pullback imminent, right? You are kind of losing a bit of momentum here, but that's kind of to be expected. Like I said, you could have a nice pullback and still be very reasonable. In fact, if you did, you would have 1, 2, 3 higher lows, which would be great rule of 3, right? That you're just going to continue to stair step your way up to higher levels, but it does not need to push all-time highs. And this is what I was going to say before. Now I'm going to take you back in time. This is a coin, Dogecoin, and I'm going to take you back to the 2018 chart. And there's a couple of reasons I want to do this, and it's going to lead into our next chart that we're going to talk about. But you could see we had, at the time, a nice rally that led to our all-time high of 1 penny, almost 2 cents, right, on January 18th. And then you had a nice drawdown, right? You pulled back to levels that, I mean, right here is a realistic point that you pulled back to, and that's at 0.25 of a penny, right? So you can see you have a nice flat base almost, where you were saying, okay, this is your support line. Support line's built in, and you pulled back to it. And you kind of had a couple little pumps after that. Now I want to show you the significance of these little pumps and why we don't need to push all-time highs to make money here. This all-time high rally is going to be ridiculous, right? You're talking 2,000%. Okay, you don't see those every day. That's like, I don't know, once every some odd years, right? But let's say this little pump right here, where you're not pushing that all-time high, but you're still going to catch it off the support where you have a very low risk entry, and then you're going to catch it to the high. You're talking about 209% off this quote-unquote little pump. And there's countless ones like that all around here. Like this one, for instance, low to high, talking about 500% before it absolutely took off and retested the all-time highs to continue on higher. I'm just saying that in Bitcoin, we don't need to push all-time highs to have very profitable time frames, right? We could easily be pushing to $40,000-$50,000 right now and have some pullbacks and be very reasonable, right? This pulled back to this support line 1, 2, 3, 4, even broke below it 5 times before continuing onward. And in those time frames, you had a 160% gain, 130% gain, 100% gain. So there's room to play the middle ground is what I'm trying to say, right? Now, another thing I wanted to show, was it on this chart? I think it was this time frame. Let's just see if I can pull it up real quick. There was this general upsloping of higher lows that was happening. I don't know that this is the specific example, but you had this nice wedge forming, right? I'm not going to draw this perfect, but that's fine. Then you had this massive support line at 0.19 cents where you were respecting it, but then you were building higher lows each time, and it was just kind of stair stepping its way up before it actually took off to ungodly levels of 70 some cents, right? I want to show you a different coin that on the longer time frame is making me get those kind of vibes where it's like, something's happening here on the macro scale where you are getting this like massive stair stepping higher lows each time on a very long time frame, which tells me each time it's pulling back after a massive run, it's building higher, right? So it's like, and we can't fall back to that same level, so this is as low as we're going to get, pump from there, fall back to an even higher level, saying we can't get back down to here. So then you pump again, fall back down to a level that's even higher than this previous level, saying you cannot get back down there. And then you're getting like micro pumps in there, right? Where you're again respecting that trend line. I'm super bullish on this right now. Like I just think no one is noticing that macro case in Litecoin, and I think it's been one of those coins that's been like underappreciated for a long time. I think it is sitting in a lot of people's portfolio untouched because people know that at some point this one's going to pop, and they've been expecting it for a very long time, and I think it's about to get its heyday, right? You almost expect to see it because every time it's come back to touch this trend line, you had a 300% pump. You had I'll call it from here almost 1,000% pump. So what are you expecting to happen this time that it touches, right? Could you see another 1,000% pump and go up to about $500? I think it's fairly reasonable, right? You'd be pushing all-time highs, but I don't think in this economic environment, Bitcoin needs to be pushing all-time highs for this to happen. I think Litecoin is a strong enough crypto to do that independent of Bitcoin, where it could just have its own rally, right? As long as Bitcoin is keeping pace, or like it's not completely tanking, I think it's possible. But realistically, I think Bitcoin dominance is going to take over. You're going to see a lot of money move into Bitcoin with this, and I also think you might see a lot move into Litecoin. Back in the day, it was one of the reasons I used it, because Bitcoin was kind of slow and Litecoin was actually a lot faster to transact with, and trading between exchanges and stuff like that, I was using my Litecoin to do that. I'm going to leave this 1,000% gain on the chart just to say, hey, we're calling that this is going to make a massive move after touching this trend line. And that's my prediction, right? And the thing is on the smaller time frame, we're looking at the weekly right now. It still looks bullish as fuck. Like, so sorry to swear there, but like you got this downsloping trend line, broke out above that, and then you did a nice back test before springboarding higher. Then you're building a nice trend line that's sloping upward, and you're respecting it each time. You're respecting the 200-day moving average. No, that's the 200-day weekly average. Respecting the 200-day moving average, and you're broken out from your local levels right now. So you are above $86, which means you're in breakout territory. You obviously want to get above 100, 106 to be broken out of like the most local. But then after that, what do you got? 140? I think 140 is your 140, give or take 10. That's your area. So I'm gonna draw this 140. Let's do it right here. We're gonna color this baby green. That's your money making right there. And you can see we were even saying like, hey, this might be topping out. We were seeing two looked like it was rolling over. But then we were also seeing these bottom three looking like they were building higher. But then Bitcoin kind of shit the bed, and since then you've been pumping. You've been doing really well. So really liking to see this. Really think Litecoin is going to continue higher, and I think there's a strong case that this overall upslope dating back to 2017, where these lows just keep stair-stepping higher, is just, there's something to it. There's people accumulating this every single time, right? Momentum is positive for Litecoin right now. RSI is still pretty low considering how much you just pumped. Green volume coming in. Look, I don't know. Is there anything negative that I'm missing on this? Because where is it? Right? Ethereum. Another one that's doing well. What I really think, and this was kind of the sentiment that I was hearing all along with this pump, is that people want to get into the quote unquote blue chips of crypto. They want to buy the Ethereum, they want to buy the Litecoin, they want to buy the Bitcoin, right? They want to get the big names, the ones that have been around for a while, and then maybe they'll play around with the little piddly tokens just to get some quick profits, right? Maybe they'll do it to get some exposure, right? But overall, what I heard a lot of people say is they want to start owning some of these other ones. They want to own Ethereum, Bitcoin, and Litecoin. And I think that's what you're seeing. And anytime Bitcoin's pumping, Litecoin and Ethereum and a little bit of BNB are the ones that are also pumping along with it the most. So I think the big chip players are the ones that are going to benefit the most. And we're going to look at XRP too, because I haven't really seen the fallout of that pump. Just kind of want to see what happened with that. So we have a fib drawn on this chart, and it's not even from the all-time high, right? So very conservative Fibonacci from this high to this low, and you can see we're already above the 236, so it's already a valid fib. Looking great, and realistically you could see a 382, a 50%, or a 618. These are your common retrace levels. Your 618 is also correlating to this low back in September 20th of 21. Just multiple touches around that zone where I think that's the level that you would pump to, right? And to there, you're talking about close to 50% gain at that point. So lots of upside to Ethereum, especially when you start to break out this 382 level of 20,000. I think that's kind of a local point. So what I would imagine is going to happen is when you get to that point, you're going to have a little bit of price action where it's going to have to determine what we're going to do. You might have some rolling over. You might see something like is happening with Bitcoin where you're hitting an important level and you're just making a decision. Are we strong enough here to continue on higher? Or do we need to come back a little bit, you know, put some nails in the floor as support before you continue on higher? I think that's very reasonable. And I think that level at 2000 is where you're going to do it with Ethereum, because you're already broken out of all these other areas, all these other local areas that you're done with, right? Like this was a significant one because you had 1, 2, 3, 4, call it 5, 6 touches as support at 1711. And look at where you're at right now. You are, goddamn, you're riding right above that. And look how significantly above the 200-day moving average you are. Again, like when Bitcoin did this, you wanted to see all the altcoins do it. You for sure saw all the big chip ones do it. Like Litecoin, Ethereum, BNB. Boom. Big ones did it. I said I want to see XRP. Zcash looks good for a coin flip right here. Right, you're bouncing off relative all-time lows. Not a bad spot to take a bet that you would continue on higher. Very low risk as well. I would take that if I was looking for a trade right now. Just monitor it close because you want your stop below 33, right? You don't want to be going down even high, even more to like 26, because if it rolls past 33, you're going down to there. You're going down 26, maybe even lower to 19 if it's a real bad breakdown. XRP is the last. No, I'm going to do a couple more cryptos because these are looking juicy. XRP, you're riding above the 200-day moving average. You have fallen back into this parallel channel, much like you did again with this time frame here, where you broke out but didn't have strength to keep out of there. This is a much more subdued breakout, right? You didn't get as high, you didn't sustain highs out of that parallel channel. You immediately fell back in. So my opinion on this is still much to do about nothing, right? You are still in a holding pattern where you're waiting and waiting and waiting and waiting. And I could keep repeating that waiting because you have just been waiting for forever for this. You do have higher lows that are building. Looks great. Your momentum is positive for now. Good volume coming in. RSI is a little high, but I mean, you look good. You're ready to go. Just haven't yet, I guess. I do want to look at Theta, because this is one of my major holdings, right? This is one that I've been playing for a while and looking for it to just come back with some strength, right? This is one of the... Okay, so when you build your portfolio, it's cool to do all this trading and stuff, but I don't want you to think that that's the only thing you should be doing, right? You should be doing plays that you think the fundamentals are strong, right? Like, hey, I think this company is doing really well, like Amazon. Like, there's no reason not to own Amazon in a portfolio. Like, you think they're going to be better or worse within 10 years. Honestly, I think they're going to be much better. So it makes sense to own something like that. This is one of those tokens. This is a fundamental play to me, where this is actually, in my opinion, Theta is a solid company masked as a crypto company, right? Like they kind of went under the radar because they're a crypto company, but they're legitimate, right? They have a use case. They have a strong team. There's just a lot of things you could say about it. And this is why I've been such a long-term holder of this project and actually, look at it every single time. But you could see you had that massive pullback, which all cryptos did, and it's to be expected. But the level you pulled back to correlated to kind of this little price action right in this time frame of the 20th. I drew it as, why can't I delete that now? There you go. I drew it as like you had this nice breakout, but you were respecting this level as multiple touches as resistance. So there's some sort of significance to that level is what it was telling me. And that level is 71-ish cents. And you just so happen to pull back right to that level. So you pulled back all the way back in December of 2022. So couple months ago, and since then you've been kind of not doing much. You had a little bit of pump up, but have really yet to show any significant pumps or really any significant price action. You kind of failed here to surpass your local high. So you had this high in November 22 where you were bouncing off this supposed support, broke to the upside, but then fell back down. In this instance, you failed to break that, which is not a great sign, but you are staging to build a higher low. So at this point, you could see when you pumped in October and came back down, your low was lower, right? You were building a downward slope which is not good. That's not what you want. But this time, when you pumped up and tested that line, you're building a higher low, right, than your previous one. What that's telling you is that the reversal is happening. You've put in a bottom and you're ready to continue to make runs at this level. And I think it's a matter of time before you break that. If you do, let's see where you're going. Next stop, 140 to 170. And after that, I don't think you got anything till $2.28. Like these are your levels here. That's what I'm gonna say. So from that breakout of 128, you'd have a 40% to a 70% move. From current, you could even say 119. Oops. ICX, much the same, except for this one, you're above the 200-day moving average, looks good. T-Fuel, not looking great. I don't like it, but you do have the bottom put in, but you have that pretty much across the board on crypto. Amazon, switching over to stocks now. This is one that has been following the drawing exactly so far. So kind of cool to see, like, hey, we identified this pattern. We identified what might play out. We identified when we're going to take our position, and just waiting for it to get to that level yet. So a breakout of this top green line is when you want to take your position, because you have been broken out of this broadening wedge, which is a recognizable pattern, right? And to make your target on this, what your measured move would be is from your breakout to the top of the pattern, which is at about $170, right? And you can limit your stop loss, because any break, if it were to break back down into this broadening wedge, you would stop yourself out, right? So you can really limit your risk reward to a significant level. So Amazon looking good. You are also staging to build higher lows, and a pump here would really get you going. What is this? Oh, these are headlines. Earnings coming up in April, and I don't know. Could you see the pump happening right then, and then a nice back test? Like I could see that happening in one day. So Thursday, April 27th, I imagine there's going to be a good earnings report, right? We'll see. Looking good. So here we go. There is a how do I want to call it, a market shift happening, where energy stocks are getting kind of squeezed a little bit, and technology is starting to grow. Like Amazon's doing well, but all my energy plays are not doing as well, right? So this was a fertilizer company that I had purchased back in the day, and it just keeps breaking down. Our line in the sand is 42.32, right? Break down below that level and we're out, because we don't want to break below this high. And it also correlates to a couple touches back here, but you can see it's tested this multiple times. The third one might be significant, and have to wait and see. You're also building lower highs, which is not something you want to see. It's basically saying that it's failing to go higher every single time it's making a run. Not what you want to see. This is a lithium company, and you can see we had a nice parallel downsloping channel, breakout above there with a nice back test, but you have yet to respect that back test. So you want to see a back test spring you up. It has just rode along the top side of that parallel channel, so not super bullish yet, but if you start to turn around, make higher lows, might be okay. I think this would be the level that you start to do it if you were to do it anywhere. Why do I have this red line at 26 cents? Well, let's see if we can find any significance here. It was a touch as support, in June of 2020, and then multiple touches as resistance, multiple touches as support, and that's probably it, right? Yep. So we were saying that this is just an important level, and most likely a level to reverse at. T-Mobile still looking like it's kind of topping out. I don't know what the merger of Mint or whatever the hell they just bought is going to do to this. Our line in the sand is 135. We don't want to hold this after that because you're then breaking this high. Or you also don't want to, well, I only have 2 touches here, so I can't really say that. Can I draw 3? No, I cannot. Okay. So that's our current line in the sand. Chili's I thought was looking good too. Yeah, so you had nice 1, 2, 3 touches of this trend line. Would like to see it stop rolling over and spring higher, right? I don't want to see another touch before you go higher. Let's make a run for it. Down below the 200-day moving average, so that's not great either. I do want to pull up EOSE. This is one that has just been doing well, just been on a rip the past couple days. From the low to the high, you're already talking about close to 200% gain. Did I get a 200% gain? You're wrong. I did not get a 200% gain, but I did get something like this, which is close to 100% gain because I know I caught it off the back test of this breakout. But I just don't think this is a nice actionable level. If you did want to take action, you'd be looking at a breakout above $2.52, because when you get above that level, your next stop is potentially 350-ish and 450-ish, followed by 750, 870, then 1003. So not many stops along the way. Like, you could easily see some high rewards by playing this one. So you're risking a little to potentially get a lot, right? So you would wait for that breakout, since we missed that back test at this point if you were to play it now. Now PAA, this is energy, and we were saying that the market's shifting and energy was not doing the greatest. However, I do think as the realization that we are in a recession starts to hit, I do think energy is going to start to go up again. I don't think gas prices have gone down that drastically, where energy is not going to start picking up again. We did get stopped out of this trade. We tried to play the breakout of this, but it pulled back down. And what we're saying about this is maybe it just needs a little more time. Maybe this was a fake out breakout, and maybe it wants to do a little bit of back test before having the real breakout. So maybe it was like, hey, we're breaking out, but we don't have full strength yet, so we're going to come back down here, put some more support in, coil that spring up a little more, so that when we do break out again, we're ready to go. You can see that happening fairly easy. What we don't want to see at all is we don't want to see a breakout to the downside of this trend line. We see that, GG's, right? Then you're probably in a bear flag, right? Because you had this massive downtrend for years, and it just saw this consolidation. We're like, okay, something's happening here. It's either going to break to the upside or break to the downside. Saw it break to the upside, so you play that, right? And sometimes you get stopped out. Just the way it goes. XLM is one that I really want to happen, but has not and will not and refuses for God knows why. Can't even draw anything. Why do I have this 7-cent level? Let's see. Correlates to the 2017 high. And you can see again, like many of these other ones, like even Bitcoin, you're respecting that, you're building higher lows off of that. You're actually locally not breaking out anymore, but you were the past within this week, right? So if you continue that, you can get a nice breakout above 9.5 cents, maybe even a little higher. Let's draw it where it needs to be. Yeah, 9.5 cents. I think you're going to continue higher. Next stop would be 12 cents. Would be cool. Plus you get above the 200-day moving average, which is always nice. CRX still below where you want to be, that trend line. All these other cryptos that were strong, that were showing this pump really was significant, are now above that trend line. They're back above there, and I'll show you real quick on Bitcoin. Like the trend line we had, see that breakout brought you above there. That's what the real strong ones are doing. Obviously this doesn't have as much strength. You are above the 200-day moving average, but that's because it's sloping down so drastically, right? You definitely want to get back above this trend line. Definitely want to break higher than this local high, and I think that's necessary to continue on. Same thing with Shiba. Really did not do well. You're actually putting in lower lows than previous, so you're kind of rolling over. I mean, this is what you need to respect at this point. So you need to keep this trend line as your support. Falling below it is not good. But I mean, on the macro, like the weekly, like you're probably all right. You're fine. You know, nothing to worry about. As long as you're not falling below this level. So you're getting back to like very low risk entries on some of these alts. The main ones, you're getting higher risk because you're not at those low levels anymore. Now look at Intel. Like, what the frick is going on with this? Like, you just had multiple tests of this 236 level, and you're getting wicks up there. You're not even getting like a candle close there, where it's like 1, 2, 3. No, not happening. Are we literally going to push back down to $25.46? Because I don't think you can handle many more tests of that level. And I think if you do, look what happens when you fall below it. Like, what are we going to, 12? I think if you do fall below 25, like, that's pretty significant. Why is it not drawing my line? Okay, there we go. Shit, that would not be good. Yep, you would see 1935 potentially. Would not be great. Yeah, if you have any you'd like me to look at, let me know in the chat. Let me know in the comments. I'd appreciate that. Otherwise, let's look at 2 more, and then we will say good night and be done. GE, head and shoulders, or inverse head and shoulders, right, at an important inflection zone at $36.61. Why is this important? Because, well, it bounced in the crash of 09 right off that level, and also had multiple touches back in 92 and 1990, right? So it's just showing that there's significance to that level. When it gets to that level, it will not fall harder than that. Like, that's the point where it starts to reverse, and since then has reversed. And we identified this inverse head and shoulders pattern. The way you get a measured move out of this is you take the neckline to the top of the head, copy that, paste it on the breakout of the neckline. So that will correlate to a 57% move. If we see that, I think the real play is 130, because it correlates to this bounce on February of 03, where you had a nice pullback, tested that level as support, and again in February of 11th tested it as resistance before continuing to break higher. So I think realistically our stop is 130 on this. Now, will you have some plays in the middle where you'll have some pullbacks and pumps? Of course, that's the way charts go, right? But I think that is what you're going to see. And the real thing is are we reversing from that level? Are we going to, oh, come on, stop lagging out. You can't draw it, can you? Nope. Yeah, I was thinking it was a nice wedge, but it's really not. But is it going to be a reversal, right? This is going to be a big one, especially when, I don't know, they turn the money printer on and we start going into infrastructure again, and everyone's like, oh, we need renewables and we need to bail out the aircrafts and stuff like that. Well, who do you think's going to benefit from that? G has been in the government's hand for years, taking every handout they can get. So when that money printer turns back on, baby G is just gonna roll. But yeah, I just showed you the inverse head and shoulders. Now this one is forming on Nokia. Is it gonna play out? Yet to be determined. So you don't take that trade till you get the breakout of the neckline. If you do, your measured move takes you up to 66%, 62 to call it safe. But I think the real level is 1084, because that's where you pulled back to off this massive downtrend, right? I don't know what happened back then. I definitely was not looking at stocks in 04. I was just entering high school, to be honest, and more worried about going to war with other countries and still dealing with 9/11 and stuff. Yeah, different time. Anyways, that is the level. You do get a breakout of that neckline. That's where you're going. You would set your stop loss right below that neckline. Right below that neckline, so if you did fall back into it, you would get stopped out of your trade. But that is all I wanted to look at for these cryptos and stocks. So I appreciate you watching in the other room. Thank you.